Hey, what's going on, guys? Just want to give a quick update on Fubo stock. They just released their Q3 earnings. They absolutely killed it. But there's a couple things in the numbers I just want to dig into in a little bit more detail. But great earnings overall. So we'll just kind of dig into it here. As always, this is not financial advice. Please do your own research. But let's kind of jump in here. So overall, their revenue came in actually great. They've been adding subscribers. They've had price increases. They have, I think they're pushing people into higher end packages and selling more add-ons, which is great. So they came in at 313 million, up 43% year over year. Subscribers came in just under 1.5 million. I was hoping for a little bit more. But one of the things, there were a couple of questions that came up from the analysts on the call, and they're expecting a bigger impact on just between the Charter and Disney dispute. David said, and he kind of backed himself into a corner a little bit. They had pretty good growth quarter to quarter. Q3 it tends to be strong just from football and things like that. Just due to timing. But he kind of backed himself into a corner. He really said there was a pretty nominal impact from the Charter Disney dispute, and he tends to sandbag the numbers when they forecast each quarter. So they showed pretty good growth quarter over quarter, but the analysts really were trying to dig into why. He was kind of coming in because he's really, they're at 1.5 million basically now. He's forecasting 1.6 for the end of the year, and rightfully so. They kind of questioned it, and they were saying is that did we have big growth this quarter just because of the dispute? And he kind of said it was very little, just because it lasted, like I think 10 days or something, and it ended right before Monday Night Football. But the good news is they should come up higher, maybe around 1.7 million. I mean, we'll see. There might not be as many ads in Q4 this year. And he was kind of alluding to last year how we had World Cup and things like that. So they came in higher previously on Q4. So he's building in quite a bit of conservatism there. So we'll really just have to see kind of how it plays out. So that's kind of what I just wanted to bring up on the subscriber count. It's kind of good news. They were just trying to get a better story around why so many were added in the quarter, and he really said it wasn't from the dispute. It was really just from football season starting up and things like that. But, like I said, they're probably going to beat on that too in Q4. It seems a little bit low, but they really need to continue. I mean, they had 20% year over year growth. They really need to up that. They still don't have a ton of subscribers, because if they want to get into the $2, $3, $4 million or 4 million subscriber count, it's going to take forever at 20%. So they really need to focus on that. And it seems like they've been offering a lot of different options. I know they just announced that partnership with Ticker to basically give discounted subscriptions for new subscribers who own shares. So they're definitely trying to get creative. They've been running a lot of kind of specials on 20%, 30% discounts for new subs. So, we should continue to see that. They've really been trying to get more creative in that space. So we'll just have to track that. But overall, the two things that I had talked about in the previous video to look for are improvement on subscribers, which they are, but I don't think it's really enough, but also ad revenue. Ad revenue was huge. They delivered 30.3 million during Q3, which is a 34% increase. They've typically been in the 22 to 23 $1 million ad revenue, so that's a huge bump. But John Janidis, he did kind of allude to that there may be a little bit more softness in Q4 on ad spend. So that's another thing we'll just have to, make sure that they keep improving on. But I just hope they're not going to be back down to the low 20s. My guess is they'll probably be in the high 20s. They tend to be conservative and sandbag things a little bit, so it might not even be as bad as what they're saying. But they really just need to kind of work on their messaging. Because some of the questions that just came up, it was a little bit all over the place. And they got a lot of pretty tough questions from the analysts. But the other thing here, ARPU is up 17%. They're really trying to push people into higher tier packages. They've had price increases, so 83.51 for their ARPU. It's looking a lot better, and that's really driving down here. They had 6% gross margin, but they had a 619 basis point reduction in their subscriber related expenses. So all their their sports fees and things like that, they're able to bring it down to 89% of revenue. Big improvement there. They're showing growth on the top line. They're really increasing their revenue, but they're getting to a point where it's, the business model is a lot more feasible than it originally seemed like. So that's, they're showing great, on that front there. And they're still showing this, plan to hit the 2025 positive cash flow goal. It's good that they're still sticking to that. They're not backing off because, I think we'd see, a hit to the stock price if they have to come off that. But it could even be sooner if they keep on progressing the way they are with reducing costs. I don't know how many more price increases they can really handle. They don't have a ton of churn, but I think if they're going to lose some of their competitive advantage if they continue to increase that, because they're pretty evenly matched with YouTube TV right now. YouTube TV. I actually had a buddy who just got it, and he was kind of pissed because it's like $73 a month, but then if you want the Sunday ticket package, it's like another $350 a year. So that really kind of puts them YouTube TV. If you're getting that package, it's over $100 anyway. So Fubo, I think it comes in around $100 depending on what package you get. I think the higher end packages with taxes and the regional sports fee, it'll put you around like $120. But the point I'm trying to make is it's really, they're going to lose some of that competitive advantage. So, as long as they continue to reduce costs, continue to grow that gross margin, I think they're going to do great. They kind of more on that. They had a year-over-year improvement in net loss of $23 million and $43 million improvement in net cash and operating activities. So they're definitely making good progress, and the stock price, it really kind of reflected that. They had a pretty good bump. I think pre-market they were like 320, and then they kind of dipped a bit, and now I think they closed right around $3. But let's see. But the other thing that I thought was interesting, though, typically they just drop off a cliff right after earnings. But this time they held pretty good. They didn't drop off. I mean, we'll really have to see what the next couple days does. But the fact that they didn't just completely drop off right after earnings, maybe the sentiment seems like it's changing. I think there's still definitely some headwinds over the next year, as long as they're not profitable. I think we'll see a lot more of those ebbs and flows we've been seeing. So, we could have a big bump. It could pump up a bit, but at this point, it's really hard to tell. We could be up at the $4 range, or it could drop down to, $2.30, $2.40. But we'll really just kind of have to keep an eye on it. But, if you guys got anything out of this, if you like it, I'll do more of these videos. But please like and subscribe if you did like it. That's pretty much all I had. Thanks for watching.